Do you want to trade Forex like a pro? If yes, in this video I will teach you technical analysis from scratch with real charts, simple steps and no confusing jargons. Alright, before we dive into the real thing, let's take a short break. Alright, welcome back once again. As a beginner Forex trader, before you do a technical analysis, there are two things you need to understand. The first thing you need to understand is the knowledge of the candlesticks. The second thing you need to understand is the time frame, the trading time frame. What is candlesticks? Candlesticks are a pictorial representation of what is happening in the market, the activities in the market in respect to time frames. For instance, the activity that's happening in the market in 1 day, in 1 minute, in 1 month, even in 12 months, that is 1 year. So the chart gives you an information of what is going on in the market. So with the activities in the chart, you can easily predict what will take place in the Forex market. So there are types of charts. We have the Japanese candlesticks, we have the line chart, and we have the bar chart. The Japanese candlesticks is the most commonly used chart. This is the example of the line chart. This is a sample of the bar chart, and this is the most commonly used one, the candlestick. It is called candlestick because it looks like a candle. Every single candle here on this chart gives us information, provides us information of what is going on the market. As promised earlier, I'm going to keep this tutorial as simple as possible so that it won't confuse you as a beginner trader. So for you to begin analyzing your chart and predicting what will go on in the market, there are 3 things you need to know. The first thing you will need for you to predict a market, let's say I want to predict USD JPY, which is the chart I'm currently on right here. There are 3 things I need to know. The first thing I need to know is the knowledge of the support and the resistance. The second thing I need to know is the trend line, and the last thing I need to know is the indicators. For the cost of this video, remember I promised to keep it simple and precise. I'm going to focus on support and resistance and then trend line. So without saying much, let me quickly show you how to use the number 1, the support and the resistance. For you to analyze a chart or for you to predict what is going to happen in the Forex market, you need tools like the trading view. To get the trading view is very easy. Just go to your Chrome browser if you're using your computer and type tradingview.com, and it will bring you over to this place. So if you're not using your browser, you are using your phone, just download your MetaTrader 4 or MetaTrader 5, and then you have access to the chart where you can do your analysis. So most of these tools are available on your phone, but not all. So if you're using your computer, so just go over to the horizontal line, pick out your horizontal line. So before I analyze the chart, I must do what is called the top-down analysis. The top-down analysis is the type of analysis where I will go to the highest time frame and then slowly come down to the lowest time frame. I will check what is happening on the highest time frame, then slowly come down to the lowest time frame. For instance, I will go over to I will limit this tutorial to the monthly time frame. So on your phone you will see the monthly time frame, but on my system I can even see the 12 months, the 6 months, and the 3 months. But in the course of this tutorial, I'm going to limit you to just the monthly time frame. So in the monthly time frame, so all you need to do is to predict, to check what is going on in the monthly time frame. So now I just pull out my horizontal line and mark the level. So we take note of levels on the support and resistance strategy. I take note of the level. So this is the highest high the market has made on the monthly time frame. So on the monthly time frame, I can easily tell that the market is currently bullish. So as a beginner trader, I believe you should know terminologies like the bullish and the bearish by now. The bullish stands for a buying trend or a buying trade. The bearish stands for a selling trend or a selling. So now you can see from the monthly time frame, I can easily tell that the market is currently bullish. So I slowly come down to the weekly time frame, and also find out that the market is actually still buying, still bullish. So I'll come down to the daily time frame. So on the daily time frame, I still also notice that the market is still buying. So this is where I'm going to start my analysis from the daily time frame, because I am basically a swing trader. So even if you are a scalper, you still need to know the general picture, because the daily time frame gives you the overall picture of what the market is currently doing. So this is where I'm going to do my analysis from. So I pick out my horizontal line, and place it on the last candle that I can see over here. The last candle I can see, just follow the cursor. So this is the last candle I can see over here. So I have to shift this a little bit. So now the next thing I have to do is to pull out another horizontal line and place it here. So what I'm concerned with the area where I have more touches. For instance, let me explain. The market came from here to this point, pushed up to this point, came over here to this point, came again to this point, came again to this point. You can see it touches the trend line again, came again to this point, and pick up another trend indicator, came again to this point, came again, touches the trend line again. So with this, I can easily tell that that is the area where the market is actually that is a level, that's an active level in the market on the daily time frame. I can easily tell that that's the active level. So I'm not going to do anything here because that's a very high time frame. So I come to the 4 hours time frame to also understand what's going on in the market. So from the 4 hours time frame, I can still see that the market is actually respecting that particular level. So I go over to the 1 hour time frame. So this is the time frame that I'll be focusing on in order to place my trade. So I pick up my horizontal line once again and place on this level. On the 1 hour time frame, I can see that the market is currently selling, but yes, currently selling. So I'll pick out my horizontal line, mark that level. I pick out my horizontal line and mark this level on the 1 hour time frame. So I'm not actually going to fill my entire chart with this line. No, I'm only focusing on an important levels in the market. I can now go over to the 30 minutes time frame to also observe or find out levels that I can mark. So finally I'll be stopping in the 15-minute time frame, because this is the time frame which I trade. So I can now pick out more of my horizontal line and mark levels. I can mark this level, I can mark this level. So now from this horizontal line, from this support and resistance line, I can now predict the market, what is going on. This level becomes my support level, and this level becomes my horizontal and my resistance level, which is the roof. So whenever market comes up this level, I should be expecting to see a sell, right? When market comes to this level, to this point, I should be expecting to see a sell. I should be expecting it to drop down. Why? Because previously in the market there has always been a sell each time market touches that level. You can see it over here. Each time market touches that level, so that is a respected level in the market as long as support and resistance strategy is concerned. So each time market reaches that level, I should be expecting a sell. So same goes to this. etc. So now I also need to use some other conflicts like the candlesticks, reversal patterns. For instance, if I'm seeing a pin bar on this resistance level, if I see a pin bar on this resistance level, then that pin bar should make this analysis more as in confirmed. You need to use other confirmation like the candlestick reversal patterns, which I just mentioned earlier. Now, having said much, this is for support and resistance. Having said much, let me also talk about trend line. So for me to handle trend line, I have to clear my chart. So I'm going to remove all the drawings from my chart. Almost the same process that I did in the support and resistance, but the difference here is that I'm going to start from the 4 hours time frame, and then from the 4 hours time frame, let me shift this. Now from the 4 hours time frame, I noticed that I point out levels. I point out levels in the market. I point out these levels from the 4 hours time frame. I point out this level. I point out this level. It still work almost like the support and resistance, but it's quite different from the support and resistance. So I point out that level. All I just need to do is just to pull out my trend line, as the name implies, trend line. So it's also available on your phone as well, and then connect that level. So I'm trying to make this lecture as precise as possible. So all I just need to do is to connect that level. Now when I connect that level, I find out that each time market gets to this point, it bounces back. It got to this point, it bounces to a buy. It got to this point, it bounces to another buy. It got to this point, it bounces to another buy. Each time market breaks below this point, I should start looking forward for I need to start looking forward for what? For a sell trade. Like as we can see right here now, market has actually broken below this point, so I should be looking out for a sell trade. Of course, this is the 4 hours time frame, so I'm not going to this is very big time frame, so you're not going to focus on this time frame and pick analysis. Of course, you have to go lower for confirmation. You have to go to 1 minute time frame and observe what's going on from the 1 minute time frame. Also have to go lower to the 30 minutes time frame. So from the 30 minute time frame, you can actually see that the market is actually has broken below that that trend line, and then it's trying to sell, and it has made some series of higher lower low, lower high, lower low, lower high, lower low, lower high. Remember, candles don't go directly, the market doesn't go straight. It makes some series of higher high, higher low, higher high, higher low. Same goes to low the sell trend. It makes some series of lower low, lower high, lower low, lower high. So this is the simplest way you can predict your market. So for me to pick a trade, I can actually go lower to 15 minutes, and then with 15 minutes I can also see that market has broken below that level, and then it has given me another level that I need to look out for. So I can pull out another trend line and mark that level. I can pull out another trend line and mark that level. You can see market has actually supported that level. You don't need to force it. So you can double it. You can actually double it. You can draw another trend line here. Then you watch the market. So the market has actually broken above that trend line. So now, how to pick a trade now from the 15 minutes? You can say, okay, fine, all you just need to do is, since the market has broken out from this level, you wait for a retest. Those are the common language. Okay, let me highlight this so that you will see it. So we actually wait for a retest. Retest is whenever there's a breakout, there's always a retest. So we have fake retest or fake breakouts. So market can break out like this and then come back to this trend line before pushing up, or break further lower. So we have to watch out for that. So there must be a retest before market will go maybe upward more. So you can actually pick a trade like this. So you can place your stop loss. So if you must trade this, you wait for the breakout, wait for a retest, and then when it starts selling and buying, rather, you place your trade, and then look for your stop loss needs to be below this. You need to place your stop loss below this. So this is where you need to place your stop loss. So guys, this is how you can target maybe the next level, which is this level here, or this is this level, or this level. So guys, this is how you can actually do a very simple technical analysis without getting confused. So for the indicators, you can use indicators like the moving average, the Bollinger Band, etc. for a professional analysis. So this is the simplest way you can actually predict the market and still come out with profits. Alright guys, if you find value in this video, ensure you hit the subscribe button and turn on the notification bell. Peace out.